It is time to go cruising. This is a encore from our first cruise panel that we held at the conference in November, and people were extremely interested in that, and so we are back for more. Led by Peter Shaerf, Managing Director, AMA Capital Partners. The cruise industry momentum continues to build. Peter and panel, thank you.
Michael, thank you. Everybody's sort of drifting in, so I can do a quick AMA commercial. Many of you know me, many of you know AMA. We've actually been quite active in the cruise business over the years. We did some restructuring from NCL. We founded Oceania. We worked for Windstar, Variety, Crystal, amongst others. We've done some port work. So we're fairly well versed in the industry, and I've got a great panel here. Let me start far left. Matthew Shollar is the visionary behind Transcend Cruises, who have developed a river cruise plan. It's a B2B concept. They have their first ship is under construction, delivering next year. It's 76% already sold for the first year. 76, yep. Doug Prothero, I've known for 20 years plus. And I've known Matthew about 20 years too. In fact, we were introduced by Jim Lawrence.
We were both darker hair.
Yeah. Great, but you have a lot. Doug was the visionary and founder of Ritz-Carlton and is now left Ritz-Carlton, is now embarking on another luxury cruise venture, which he has told me nothing about and promises today, to tell me nothing about. Hardin Bethea, I've known also a long time, is HSB Capital, but he's also started Pax Shipping, which is a sort of consultant, broadly defined, to the cruise business, and Hardin was very involved in one of the recent residences at sea projects, which is actually sailing the Braemar? Oh, the Odyssey. Now the Odyssey, right. Spent a few months in Belfast, but is now sailing the world. Evan Behrens is an investor. Evan has looked at more cruise deals than I've had hot dinners, and we've worked fairly closely together on a whole number, covering a wide range from Margaritaville right through to some of the smaller ones. So to kick it off, we're just going to sort of focus, it's a sort of 30,000-foot view here. We're going to focus on a couple of areas. Where are the opportunities for investors in the market? And maybe how do you raise money and how do you pay for them? I'm going to kick it off. Doug, maybe you want to start because you had all that time in the luxury end. And I think we're focused more on the luxury end, the smaller ships, which, if you look at the cruise industry, I'll just give a quick commercial on the cruise industry. There were about 33 million cruise passengers last year. And by comparison, if you go to Rome, there were 31 million visitors to Rome last year. So we see the trajectory for the cruise business is significant. The luxury cruise market and the smaller ships, which really is the focus today, ships under 1,000 passengers, there are about 90 ships in the world. There's a significant new building fleet coming on. Take it away. I think that's a good overview.
Okay, thanks, Peter. So using that, launching off of that point, that this is an industry that has barely touched the overall leisure industry. It's quite a low penetration rate, and as a result, there's a lot of opportunity geographically, by sector within river, ocean, near coastal, expedition. There's plenty of opportunity focusing from different regions. Latin America, India has now discovered cruise. China has built its first own mass market ships, and we think that as that market starts to understand cruise from the customer standpoint, the individual traveler standpoint, that cruise will really take off in that part of the world as well. So lots of opportunity. I think the main thing I would say to this audience is there's a high barrier to entry, and so but there are operators out there who have figured out the keys to the door, and those four, in my mind, there's really four main ingredients to that. You need the right team that's leading it in the first place. They need distribution in one form or another. In my case, it was an ultra-luxury brand entering a sector for the first time. But there are other opportunities out there for distribution. You obviously need a building slot or an acquisition target if you're repurposing a ship, and then you need the money. And if you're missing any one of those four, you're not going to get through the barrier to entry.
And maybe that's a good segue into Matthew, who's started something in the riverside. Whether you just want to talk about it or address those points. You've got a team, you've got some financing, and you've got a slot. We don't need to necessarily go into the full business plan, but give you a 30,000-foot view.
Certainly, and just to follow on what Doug said, I think when we all look at opportunities in any sector, the question is, are we sort of cannibalizing what everyone else is doing, right? There's X million cruise passengers, as we talked about. Okay, a new brand comes in. A lot of that exercise is very often just to protect the brand, right? People are leaving in a sector to another brand. The question, I think, when we look at some of these expansion models is, can we actually create something which opens up the market beyond people who typically would see themselves as a cruise passenger? I think Doug did that very much with Ritz-Carlton. Again, the goal there was to bring the hotel guests in. We're doing that in the river space by being a B2B company, and a lot of companies that are hosting corporate events, for example, would never look at cruise because it simply doesn't fit their profile of what they would need. And we've solved some of the hardware and software issues for them. So again, if you can crack that mystery sort of providing a combination of hardware and software that works for a group that is not currently your customer, there's an ocean of opportunity there, because again, you're not trying to just bring that same cruise customer to another brand. And I think that's really where the other piece, aside from capital and a team and everything else that's important.
Right. And Evan, you and I have talked a long time about teams, and you've had experience looking at teams, how they work, how well they work, and how important that is to deliver a product.
Well, I think there's a lot of elements that are very different when you look at a smaller cruise ship. Your break-evens are significantly higher because you have fewer levers to pull, so you have to drive a higher day rate, and when you have a higher day rate, or not a day rate, but a RevPAR, you've got to offer more services, so how do you create a balance? And so what we found is, we're still trying to understand, is we've spent a lot of time. One is Jim Dolphin and Peter at AMA have always said two things. You need to have your own reservation system or tapped into someone with distribution. And then two, you got to have terraces which is
balconies. You love balconies, right?
But I think the fundamental problem is, what's the right size asset to buy to generate the necessary return. And then the problem is, you can't always buy what you want. So if you can't get, building a ship is expensive, getting the capacity, the shipyard space is hard. You look at a lot of second-hand, third-hand things, and then ultimately the cost, you don't get what you want. You have to use what you have. And I think the biggest issue is, you're looking at guys who are setting up brands today where the capital creep has gone way higher than what the original proposition was. So we can talk about that later.
And you had the experience recently with a second-hand ship developing a market. You were telling me that the team was a strong team. Maybe you just want to talk just the snapshot of the sort of residency project that you recently succeeded in.
Yeah, I think back to what Doug said, those elements have to fall into place. But from a bigger picture perspective, the reason I'm interested in the cruise market, having spent 20-some years in more commodity shipping, is it's all on a floating asset. So you have the same complexity from an operational perspective that you do with a commodity ship, and you add in, depending on the capacity of the passenger vessel, potentially thousands of other complications, right, that walk around. So from an investment perspective, it's always, I think, a challenge from a standing start with a new business in cruise to attract capital. In this particular case, the reason I think it worked, which is a residency project, the company is called Villa V Shipping, or Villa V Residences, they were able to pre-sell cabins on the ship. Basically, it's a permanent right to use of a cabin. And so the funding mechanism was kind of flipped upside down. It's more like a development project. And my role in that was to identify a credit partner to finance a portion of the purchase price of a ship that had been laid up during COVID, needed to be fully reclassed and really renovated, but where the equity, so to speak, was raised from customers before the ship ever sailed, which is, from a capitalization perspective and from a capital markets perspective, something that I've never seen in shipping. So obviously complex to get through a dry dock for that vessel, but it's been now operating with passengers on board for 7-8 months. And to rebuild, or to build new that vessel, which was acquired for some fraction of kind of replacement cost, would have been, hundreds of millions of dollars likely.
I want to get into that differential in a little bit. We've still got time. I want to shift a little bit to the discussion of brand. So many people think how important brand is. At Ritz-Carlton, you were sort of able to tie in, with the hotel brand, and that was important. Give me your view on brand, because you sort of question it. It's not the be-all and end-all. It's part of the puzzle.
Well, I think the answer is it's distribution. Whether that distribution,
which is what Evan said as well, right?
Whether it comes from a brand or it comes from a customer, a need. It's identifying what that need is for the product you're going to deliver. In our case, it was we weren't just looking for a hotel customer. We were looking for people who don't take a cruise. Specifically, we were designing a product that was going to be priced very differently, very different service level, and at the heart of that was, as we raised the money, I can tell you in this town, everybody wanted to meet us when we were raising that money, because the story was, it was a super yacht and that brand, but and it was a new building and a startup. They wanted to have that conversation. Where people mostly got stuck was the fact that it was a greenfield project. We did get there.
Right, and to the point that you wanted new passengers, in a way, that's part of your model too, and in a way, what you succeeded with Villa V is getting new people. When you look at 31 million passengers going on cruises, in the 70s it was 500,000 or something, so the rise is exponential. Little pauses after 9/11, after the Achille Lauro, going back a few years. But cruise has always rebounded.
A few years.
What?
A few years.
A few years. Yeah, I'm getting old, right? Yeah.
But it's 8% compound annual growth
right.
since 1970.
Right, and bigger and bigger ships, but then are they attracting people to the smaller ships? Mm-hmm. But you're reaching out in a way through your sort of incentive cruises to a whole new customer, who some of them haven't been on cruises.
Our client base is really coming from a different place. We need to maintain a certain halo brand, which is really speaks to the quality and the service level. But the primary brand that's showcased on our ships is the brand of our customer. So, for example, we just concluded a deal with Lindblad National Geographic, where their brand comes to life digitally across our entire ship. And that's very key for them. And when we talk to a corporate client, it's the same thing. If Coca-Cola is doing a corporate meeting on board, they don't want to see our brand. They want to see the red swish everywhere. So the fact that we've actually created an entire branding platform digitally for our clients is something which they couldn't get on a cruise ship or even in a hotel on land. And that's been a huge factor for us as we presented our solution to people.
I think as we go forward, I wonder where you see the sort of the growth in the luxury small ship market. I mean, you've looked at a number of areas.
So you had said team before. So team always is incredibly important. You're balancing a lot of stuff. We've seen a bifurcation between those people that really understand how to execute and those people that want to be in the cruise business. I think what Doug has done and what Transcend is doing is they brought new products in. And I think where I live on the Upper East Side, which is a microcosm of nothing. But for the first time in my life, I'm seeing people talking about, I don't need to go to Cala de Volpe. I can get on a Four Seasons boat or a Ritz-Carlton ship and enjoy all the luxury. And I think the price points now Someone told me yesterday that the Hotel du Cap is $10,000 a night. Call it a Volpe is $3,000, and what you're creating is a price.
Who's staying there at that prices?
There are plenty of people staying.
Your friends.
Yeah, on the Upper East Side.
Yeah,
but you're
not
seeing
mine.
people. So I think where the inflection point has happened is I think there's now it's a little like the Delano in Miami, which Ian Traeger created the boutique. The price points are dealing with a different price umbrella. So you have a lot of room, which is I think what you were saying, Doug. You've got a lot of room inside that price umbrella to really earn money. You're not, and you're creating a completely different type of, product for people. And so where I think we're seeing a real change, and I think, the Transcend assets are really nice, is I think you are in this now boutique phase. Go to places where other people can't go to places that allow you to see multiple destinations as opposed to be at one hotel, and you're actually competing against people that are getting $3,000, $4,000 a night.
Right, and you had that with Ritz-Carlton in terms of itineraries became critical.
Yeah, I think, but the main driver was that customer could trust the experience before they got there.
Right.
So it was, they looked at the profile of the ship and they said, that's not a cruise ship, I want to go on that. So that's the number one. I could see myself going on that. And then the brand,
But the brand must have been important to get.
It was absolutely, yes.
Yeah.
I mean, they could trust what they were going to get before they got there.
Right, but from my experience on small ships, and last summer my wife and I went to Venice and on a Windstar ship, and the ship berths, 5-minute walk from the Vaporetto. You're not far away.
Yeah,
so,
you can typically get into
right.
the old town and
Right, in many of these places, and on the rivers as well.
It's interesting, so one of the things that, again, being in the charter business is and the reason we started the business because there were so many barriers to chartering. Many of our clients actually don't need the typical retail cycle, which is if you're chartering in the B2C markets, you're doing 7 nights. This is the port, beginning and end. It's very rigid. Many of our clients need 5 nights or 11. And the ability to play Tetris with the schedule and come in and deliver something that they need precisely tailored to them is, again, very unheard of. No one's done that in our industry before, and that is really a very strong part of our value proposition in the marketplace. And part of that is also delivery. Everything's over-touristed. Amsterdam continues to reduce the number of guests arriving every year, but we can go somewhere that's 5 miles away and still give them that great team building or that small museum experience because it's only 60 or 80 people on board.
Right.
So
I'm going to shift a little bit. I'm going to ask a question, which I'll give you my answer. So one of the big areas of development, or recently, has been the expedition cruises, especially to the Antarctica, the South Pole. Is this a bucket list destination where you only go once, or do you think it's a sustainable business model? It's like a yes or no answer across the board. It's a personal one for me.
Well, I'm going to tell you a very quick story because I was with the guy yesterday.
Yes or no?
Yes or no? It's a yes or no. It's not. It's not an Evans.
Yes.
Yes, it's a bucket list destination once.
People, yes.
Okay, that's what I wanted.
But I'm just telling you, the U.S. Navy is not coming to get people in the North Pole.
Right,
And
you
they
did
made a
tell me
big
that,
statement.
right? So if you get stranded there, you're screwed
Yes.
from a U.S. point of view. Maybe the
The
Chilean
U.S. Navy, I was in a conference, and they turned to the gentleman from Carnival, and they said, you can go explore wherever you want to go, but don't expect us to come pick up your
Right, but there are other
passengers."
navies. I mean, we're not, there are other
Okay.
navies. Okay. Yes or no? I'm just curious.
This is a bucket list?
Yeah,
I think it's yes.
yeah, yeah,
I think it's bucket list.
yeah.
yeah, I mean, but there's no limit to the number of people who can come. So it's a sustainable business, right?
Well, so this is where I think cruising is. So why are we talking about this at Marine Money? How's it relevant to all of you? I think it's an industry. Forget about the major cruise lines for a second, which are large publicly listed companies. That's not what we're talking about. We're talking about the markets that are accessible, that are showing accelerated growth potential. This is so it's luxury, or premium plus. It's not 5,000 of your closest friends on a ship. It's the smaller segments, so experiential travel. There is an affordability component because cruising is expensive. So if you're going to go on vacation to Florida or maybe Rome, where you're going to go on a European vacation. Cruising is something that people save to do, right? It's not like an inexpensive endeavor. So the customer is motivated to go. They want to go. But there's this entire universe of the world that has never been on a cruise. And so the growth potential is significant. But financing these assets, especially the smaller ones, is, I think, part of what we should discuss because it's relevant to you all.
Pivoted.
Right?
Thank you for the pivot.
Yeah.
How do you pay for it
I
all?
wanted to add one to that.
Yeah.
I mean, I think expedition ships can also be deployed in coastal cruising, in cold climate coastal cruising that isn't polar. I think there's a lot of opportunity there still. I mean, well, and this is kind of a polar experience, but Ponant doing the St. Lawrence in the winter this year was a very risky move in a way, but
traditionally, a lot of the Antarctic operators have come north in the winter, ballasted their ships, even the older ones.
yeah, but now there's Newfoundland, Labrador. There's a lot of area to explore. Yeah.
And I think what happens is, similar to, the Amman groupies, right? The people who go from hotel to hotel collecting this year's T-shirt. There are people who are going to want to do those experiences. They've been on 30 cruises. The idea of going to Newfoundland in November for the normal person is, an anathema. They would never want to do that. But it's really interesting to go off seasons at some of these places and get into it. So I think, and again, they're bringing 150 people. It's not a huge ship to fill.
We don't have a lot of time, so let's shift to a little bit of how we pay for all this.
My wiring instructions are on the back of my business card for anybody who wants.
Maybe you just want to talk initially about you've raised capital, you've raised debt, you've raised some equity.
So like most startups, we started with a friends and family round and then went to a seed round. We had vendor participation. So we had certain key suppliers who assisted along the way, sometimes short end, sometimes long-term debt. We then moved into, the river ships are typically financed by a couple of Swiss banks. So we have term sheets on the debt side of our business. And the view is toward fleet growth, which will be probably debt fund. We have a number of options we can pull at any given time. The goal is to build 2 ships a year. And with limited equity raise beyond that. Once we're kind of in operating mode, it's again, we're pre-sold 1.5 years, 2 years, 3 years in advance on multi-year contracts. So it's kind of a nice place to be. We can build organically as we need the ships.
Do you want to talk whether it's about Ritz-Carlton or just broadly what your experience?
But broadly, yeah. So I mean,
you did ECA financing for new buildings.
Right. So new building in cruise and even in the niche end is typically backed by export credit, so you're going to get 80% debt, 20% equity. So the equity and the management are going to be covering the startup costs and the 20% equity on the asset side.
Right. Yeah. And the equity capital.
Yeah.
Where did you see,
in our case,
even in your new business, which you're not telling me anything about, maybe tomorrow, but maybe
we'll see.
We're having lunch tomorrow.
So on the equity side, well, again, it was greenfield. We had a big brand and a new entrance, a new sector of the cruise industry, ultra luxury branded. So a lot of people wanted to talk to us. We just got very lucky with the Frankfurt office of Oaktree in that case, and then they syndicated a little bit, brought in a family office, but Oaktree carried most of it and still does.
The experience, and I think you had it, that on the Villa V thing, it was predominantly sort of friends and family for the capital, for the equity, and then the debt was European banks, or because your debt was from a European bank, it's European money primarily.
Well, in this case, yeah, the equity was provided through individual investors that the management team sourced directly, as well as purchasers of cabins on the vessel also were equity investors in the business because they really believed in it. They were going to live on this ship that's circumnavigating the globe for 3.5 years without visiting the same port. So, and then the difficult piece, honestly, in this case, was finding a lender. Remember, the ships, if you're buying a secondhand vessel in the cruise industry, it's often either laid up or it's already operating for somebody else, and there's a lead time, right? You have to wait until the vessel's available.
I mean, any secondhand ship that is desirable, as you said,
already
is
operating.
at least a year wait.
Right.
But you need a year to build up your business.
Well, in this case, not, but in most cruise businesses, yes. But it was a risk-tolerant credit fund that ultimately financed the half of the purchase price of this vessel.
Evan, do you want to address?
Yeah, no, and I think that's where the difference is, there's conventional lending and now there's the private credit market and going to a financial sponsor. So it's never easy to raise capital, but there are multiple sources of capital. The question is, what's the cost of that capital ultimately, and what are the restrictions that you're going to have to live with? We deal with a number of families that want to invest in a good equity deal, and I think in order to get the financing, banks are pretty specific. So you need to have a really detailed business plan, plus you need to show where your tickets are going to be sold.
And it comes back to a good team as well. I mean, I think that's, and you've said that. I mean, we've worked with one client. I'll name him. I mean, John Wagner, who has a great reputation, and you like him as a person and his capabilities. And there's a willingness, I think, for equity to back the right team.
Yeah, I mean, it's like anything else in the world. If someone's been successful before and shows the ability, and it wasn't a one-trick pony, those are the type of people who you definitely want to be behind. And I think in the case of American Classics, it's unfortunate that everything came apart because I think John, I went up to visit him and watch him bring the first cruise, and everyone's singing songs and drinks of rum, and he really had them going. And the ships are older ships, and he's still getting a $750 a day room rate, which is pretty impressive for the size and the product that he's doing it. So management always matters, and I think that's in anything we do. Is management at the end of the day is the difference between success and failure.
Right. Did you wanted to add something?
Well, I think back to the management point, and why it's relevant to this audience is this is a transactional market now. I think since its founding, it was dominated by a handful of larger companies and family-run businesses. I think it's a much more diverse playing field now. I think especially in this sub-1,000 passenger market, there are significant growth opportunities for the business, but also meaningful financing opportunities for capital. It's not just startup businesses like the Ritz-Carlton
There are a lot
Cruise.
of startups.
But there has been an aversion from, I think, broader participation from institutional capital as a result of the lead time, right? It's not only a startup business. You have 12 months, you need at least 12 months to sell a ticket. So unless you're providing a vessel as a tonnage, more like a tonnage provider in a traditional commodity shipping context where you have a tour operator who's booking it, Matthew's business maybe is relevant to this because you have long-term contract visibility. The challenge for equity has been believing in the market and that the team can execute a plan to generate revenue.
Right, but the other concern is, and we saw Azuro go bankrupt this last week. They had chartered the Ocean Victory, the Sunstone ship, which came out of a bankruptcy. They chartered it for running in the Med, probably the wrong ship, totally undercapitalized. And being properly capitalized, I think, is critical. As you talk about a year's lead time, whether it's a second-hand ship or a new ship, having the right amount of capital behind you is critical.
And I think the strike price is very important, right? So in other words, when, for example, Doug's program, I mean, these ships are very expensive to build. Even small ships, again, their cost per key goes up dramatically. So if you're in a space where your development costs are considerably lower, a space that I happen to be in, it's a much more attractive package because your EBITDA is a very significant portion of your revenue. So again, it really changes the dynamic of how that works.
Right. And in a commercial for Matthew, his new building cost is about $300,000 a berth. A Ritz-Carlton ship, $1 million a berth. So, and a second-hand ship that can't do the job but still needs converting, maybe a third of somewhere in the middle. Yeah. Somewhere in the middle. We've run out of time and timed it perfectly. Matt, Michael, I want to thank you for letting us do cruise at the conference, second time in a row. Maybe we get a slot, not every year, but, do some deals, and then we can be deal of the year. But Crystal Gate, you gave something to Crystal Lines, and I was involved in that deal, so, so some cruise recognition is out there. So I thank everybody. I thank Marine Money. I thank this panel. And there's a lot of opportunity. So talk to Evan, Hardin, Doug, and Matthew. Thank you.